What are you saying, people? I am back with another video for you today, and in today's video I'll be talking to you about how to day trade. Now, for those of you who don't know what day trading is, it's the act of buying and selling a share within the same day. When I say within the same day, I'm talking about a 6.5 period that the market is open. That's not counting after market hours, that's not counting pre-market hours, that's just a 6.5 period that the market is open to everyone for trading. So, the act of day trading probably sounds pretty easy. You're probably thinking, alright, a stock starts off green in the day, I'm gonna buy it, sell it at a little bit higher, and get out of it. But no, it's not that easy, it's not that simple, that's not how it works. So to probably day trade, you're gonna have to start. So for today's video, I'm gonna focus on the fundamental side of things. So that is a certain type of trading. You've got the fundamental side and you've got the technical side. This is the fundamental side. Let's say Sunday, you're gonna pick 2 or 3 stocks which you might have heard people talking about, you might have heard a little bit of news about, that might be being talked about right now. And with those 2 or 3 stocks, you're going to put them on a watch list. Now, what you're going to do with those 2 or 3 stocks is, like I've told you before, you're not going to invest in something because you've heard people talking about it. You're not going to invest in something because there's hype about it. So you're going to do your own research on the stock. You're going to do due diligence, see if there's anything that can have an effect on the stock fluctuating tomorrow. You're going to see if there's any news that could lead to the spike in the stock. You go from there. So check to see if there's any news breaking. If you find that there's news breaking, obviously the stock is likely to start, shooting up next day. But you don't just gamble there and purchase a stock. What you're going to do is you're going to wait till the next day, and it's in pre-market hours, so that's the half an hour before the stock market opens for everyone. You're going to see what the stock's doing. If it's green and you've seen there's news which could actually lead to the stock breaking out or moving higher, obviously you're going to wait till the market opens. Maybe wait 10 to 12 minutes, because that's the time when you're going to see the fluctuations happening before a steady rise or steady decrease. And again, you're going to do it based on your news that you've seen, what you've read, what you've done your research on, not what anyone's saying. Now, if you see the stock is rising due to the news that you've seen, due to a PR, an AK, whatever, you're going to purchase the stock. You're going to ride it until it gets higher. Now, this is the importance of fundamental trading here. This is fundamental trading. This is based on news. You're going to see how effective that news is when it's coming to the stock shooting up. You see the news, and at the beginning of the stock market opening, the stock is shooting up. You might want to be patient, because it might shoot up and it'll be back down before you know it. Patience is very, very important when it comes to trading. Anyway, the idea is to ride the wave, ride the stock a little bit as it goes higher in the green. You can get your 3 to 5%, whatever it is. This is day trading, remember, so you're not looking for 10, 15% gains. You're not looking for 20% gains, which you might see over a year. You're looking for something which is going to last a few hours, or even a few minutes if it's enough percentage for you. It depends what your plan is. So anyway, you're going to ride the stock. Let's say it increases by 3.5% within 45 minutes. Your plan is to take 3.5%. Once it hits that 3.5%, you're going to sell the stock. You're going to sell all your shares in the stock and take your money and get out. If your goal is 5%, you're going to wait until it hits that 5%. And if it doesn't, you see it start decreasing a little bit, you're still going to be in a profit as long as you pay attention to it and trade on time. You can take your profit and move out the stock. On the other aspect, if you look at the other side of things, if the stock is not doing what you expected, you do not invest in it. You do not go in it. You don't even need to short it. You just don't go in it at all. Patience is so important when it comes to investing, like I've said before. And like I said, if it's green, you ride it up, even if it's just a small amount. Whatever your plan is, you take profits, you don't be greedy. The mind game is one of the most important aspects when it comes to trading, as well as patience. The mind games, you're going to think, oh, it's up 5%, I want 5%. Let me change that to 10%. No, you can't gamble like that. If the market opens and it shoots up to 8 or 9% within the first 10, 15 minutes and your goal was 5%, take your profits, cover them, and get out. Think about the next day. Again, you do not want to be greedy. The mind game in investing is so important, just as much as patience. On the other hand, stock goes down, like I said before, do not invest. It's that simple. You do not have to purchase. One of the most important investments, one of the best investments you can make is not buying a stock, it's not investing. But anyway, so you've got your 2 or 3 stocks. If it happens that all 3 of them you've seen are fluctuating, are moving, then you're going to have to pay a lot of attention, a lot of care to them, and do the same trick that you did for the first one as all 3 of them. Whichever one's not working out, you cut losses as soon as possible. Whichever one's working out, you take your gains as soon as possible. Now, as I said, it's day trading, so that's day-to-day business. You're going to hold a stock within one day, within the 6.5 hours that the market is open. Don't think about the market after hours, don't think about the pre-market hours too much. Just focus mainly on what's happening while the market is open. Now, this process that you've done on Sunday night to find stocks before you invest in them on Monday morning, you're going to repeat that Sunday to Thursday. Obviously, I'm talking about the night time, Sunday to Thursday nights. You're going to repeat this every day. In fact, the 2 or 3 stocks you picked Sunday night, they might still be relevant by the time it gets to Tuesday, by the time it gets to Wednesday. But you focus on those 2 or 3 stocks, because you picked them for a reason. Whether it's because there was hype about them, whether it's because you did your due diligence and you found out more interesting things about them, whether it's because they got an ER coming up. There's a load of reasons why you could have picked a stock, but remember, you picked it for a reason. You've got to be micro-focused. Pick 2 or 3 stocks. It's not until those 2 or 3 stocks you picked from Sunday have had their action during the first few days of the market that you'll focus on something else. Don't just follow the hype. Don't just react to what everyone's doing, because again, that will get you into trouble. Day trading is extremely difficult. I can't stress how important it is to do your research, to have patience, not get greedy. You need to be very micro-focused when it comes to stock trading on a daily basis. So, just to recap, day trading is the act of buying and selling a share within the 6.5 hour period of the market being open for everyone. So again, you're going to buy a stock, hopefully when it's low, might not be at the lowest, but hopefully when it's low, when news breaks out, or when the catalyst you've expected actually makes a difference, the stock's going to start rising. It might shoot up quickly, it might rise quickly, whatever. That's what they talk about, pump and dumps. You've got to be careful. But once you ride it up, get the little profit you wanted, or get whatever percentage you went in for, and cover your profits. Again, if it doesn't reach the actual profits you were looking for, and it starts decreasing, it starts descending, take your profits before it gets red, before it suffers a reversal, you're left with nothing. You don't want that to happen. So that was it for the fundamental side of day trading, particularly the momentum-based trading. In a future video, I'll have for you the technical side of day trading. You'll see the difference between that and fundamental trading. So that's it for today's video overall. Thanks a lot for watching. Please remember to leave a like, subscribe, all of that. And I'll see you in the future for another video. Peace.